Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, that's holding on to gains. A very slight bit of a positive bias, 0.09%.
It is empowered for a very good thing, that is disgorging wrongful gains.
26,028 as of yesterday's close on the Nifty and 59,299 on the Nifty Bank as well. Nifty is starting unchanged, almost unchanged, 25,870. The Nifty Bank is blinking red and green, 58,973.
Nifty, for example, around 50% of the companies have a positive correlation to the rupee depreciation.
For Nifty companies as well, FY26 consensus has already cut their earnings by 11 percentage points.
Now down about 128 points on the sensex, 43 points on the Nifty as we speak.
The average order value has declined, and that's by design because the company has been passing on efficiencies to the customers.
Given that MUFG, if it enters in Shriram Finance, this will also make a case and headroom for further credit re-rating.
Continues to be a down day. We have been able to manage to stay at that 25,800 mark.
So far, markets, of course, treading water, not really here or there, down, of course, about 0.25% lower. So the rupee, the dollar rupee, of course, got showed up a little bit in the morning, and that did show up for a brief bit on the equity indices as well. But I mean, it's not stayed. The impact has been just fleeting in that sense. So 65 points lower, 25,793. There is no additional kind of news or anything of that sort. Which is like the dominating driver, is just a continuation of what we've had here in markets for the last few sessions now, which is a bit of a drift. I just want to quickly put up Samman Capital. The case was in the Supreme Court today, and we'll have Ashmit, our colleague, join in just a bit. I think the Samman stock is, the last I checked, was down a little bit, 2.5%. And I think it's taken a bit of a small dive after some of those details I saw flashing came through. But more context, I think that's important with, as I said, Ashmit coming up in just a bit. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Reema and Surabhi here in the studios, and Nigel is joining us from the newsroom floor. Guys, afternoon.
Hi, afternoon. We've had quite the high flyers, right, today. I think Meesho is right on top, where the market capitalization is now approaching 1 lakh crore. 97,600, I think, at last count on Meesho. So after a blockbuster listing, the stock continues to see gains. Shriram Finance has been active since morning, but on the way down, you've got softness coming through in Axo Nobel. That's a double-digit down take. And then Shakti Pumps has been all over the place, mostly up over the last couple of days, but today some profit booking. But I think the word to describe, as Prashant said, markets are just drifting today, but mostly in the red, so drifting down.
Absolutely. And I think Meesho just takes the cake. I mean, it's breathtaking. I've completely run out of words and adjectives to describe what has happened. Today was the UBS call, and UBS called for a target of around 220. And the stock's already getting there in one day. You're discounting, I don't know how many quarters and how many months ahead. It's that kind of a market. But absolutely stupendous. By the way, the breadth of the market is negative. There's no denying that or taking away from that. The mid-cap index is down 0.6%. So for all the Meeshos of the world out there, something like IOB, where there is an OFS from the government, diluting a bit of its equity, 5% lower over there. Axo Nobel, which saw a large block trade, is down about 12-13% as well. So these are some of the parts of the market where it's still a little tentative, to say the least. Some newsmakers today, IGL on the upside, continues to hold on to a lot of those gains because this one nation, one transmission tariff for gas, that's a reality. And there are some positive brokerage comments on IGL. Some of the brokers think the recent fall was excessive. The concern around the Henry Hub prices going up, that was a bit excessive. So the stock is pulling back. There's Hindustan Zinc and names like Swiggy, which are undoing some of the damage. So mixed trends, but overall, I guess, still directionless at the headline level. Absolutely. And I think we'll talk about some of these names which will be mentioned as we go along. But let me quickly tease out what's coming up here over the next 60 minutes or so. So it's, global cues, not very much to write home about, slightly weakish.
Rupee, of course, showing a bit of a rebound, 0.75% higher, 1% earlier, so it's given back some of those gains. PSU banks, IT stocks are holding out against the selling, but broader markets, of course, are seeing some cuts. Asset management companies in focus. Sources tell CNBC-TV18 that the SEBI's board meet today evening will consider those sort of draft rules with regards to mutual fund expense ratios, etc. And Yash says that, well, the push is going to be to kind of sort of stick with what was proposed. Shares of Misho, as we just pointed out, continue to surge, and UBS, of course, coming out with a call, and will 220 rupee price targets already there. Actually, Shriram Finance is the other one to look forward to. Friday board meeting, and we'll have that fundraise announcement. Perhaps the market's expecting. So 860 on that one coming through. So. Enough and more single stock action, which is out there. How should you position yourself? That's a question. Rahul Sharma, Director and Head of Technical and Derivatives at JM Financial Services, is with us. Rahul, good afternoon. Good to have you here. Is there a trade? Indices first.
Yeah, so it's definitely a ground for both the Nifty and the Bank Nifty. However, we are approaching a crucial support area of the 50-day moving average, which is placed at 25,765 odd. Now, this moving average has not been violated, or rather closed below this. We've not seen a close below this since 6th of October. So clearly, a lot will depend on how do we navigate this support area. In case we do break that, the next possible targets for the Nifty could be 25,300, 25,200 as well as the downside. So close watch on this make or break area for the Nifty. As far as Bank Nifty is concerned, that has been relatively stronger so far. But having said that, even Bank Nifty could turn bearish if we break the 58,800 on the spot. We are very close to that, just 100 points away from that. In case we do close below that, we could see a meltdown happening in the Bank Nifty as well, where the next targets could be around 58,200 odd in the immediate future. So both Nifty and Bank Nifty continue to grind down, but they are approaching crucial support levels, especially for the next 10 to 15 days that we have left in this series, or rather this calendar year so far.
What?
Yeah, sorry.
No, just wanted to ask, any stocks that you're looking to trade now, that you're tracking?
Yes, so we are sticking with strength. Even in this market, there are some stocks which are holding their setups head and shoulders above everything else. One of them is in the metal space. National Aluminium is one of those stocks which looks good on the charts. The momentum remains high on the metal space. Nalco could head towards targets of 295 to 300 on the upside. Can be looked upon for trading, buying opportunity at these levels with the stop loss placed at 273. On the flip side, something that is looking bearish is Bajaj Finance. So Bajaj Finance is attempting to break down from its current consolidation area. And the bias remains bearish for downward targets of 950 odd on the downside. So from a positional perspective, one can look to go short on Bajaj Finance, have a stop loss placed at 1020. And financials, like we are seeing in Fin Nifty, is sort of leading the downtrend in this kind of a market. So we feel that there is more upside, more downside to be had in the likes of Bajaj Finance.
Thank you very much for that. Stocks had a good run, up 46%, Bajaj Finance, since the start of the year. Rahul sees some downside. There are two key events to watch today post-market hours. One of them is the TCS Investor Meet that starts at 4 p.m. We'll try and get you snippets of that. And secondly, the SEBI board meet, where Yash has picked up from his sources that SEBI will deliberate on the mutual fund expense ratio. Very important for all the AMCs listed here. Yash joins it with what he's learning that could be on the agenda.
Well, that's correct. All important SEBI board meeting, underway as we speak, and the press conference addressing all the issues approved is expected to happen at 5:30 p.m. today. But the most important issue on the SEBI agenda would be to deliberate over the mutual fund total expense ratio norms, a consultation paper for which had come at the start of the month. What we've been given to understand from our sources is that SEBI is likely to take up the proposal of mutual fund total expense ratio in today's board meeting itself. My sources in market regulator SEBI suggest that SEBI is likely to consider, this particular change or revision when it comes to mutual fund total expenses in the same form as it was, proposed through the consultation paper. SEBI is also likely to discuss the inputs which have come from various stakeholders on the revision of the expense limits for mutual fund companies. And according to our sources, very minor changes depending on those stakeholder views are expected to be done and presented before the board today. We, of course, have to wait and watch whether it finds the final approval from market regulator SEBI's board or not. Just to put things in context, what were the changes which were suggested through the consultation paper? SEBI had proposed reducing the expenses limit for mutual funds for the first 500 crore AUM to 2.1% from 2.25%, next 250 crore to 1.9% from 2%, next 1250 crore to 1.6% from 1.75%, and accordingly there was a 15 basis points reduction which SEBI had proposed through the consultation paper depending on the AUM size. Also, SEBI had proposed to revise the cap on brokerage for cash market transactions to 2 basis points from 12 basis points and derivative market transactions to 1 basis point from 5 basis points, which currently exists.
Okay. All right. Yash, thanks very much for that. That's an important story, and I think we'll have, I guess, some clarity later today at that SEBI board meet, which is going to happen. I think Gurmeet is with us, but what we'll do is, at Gurmeet, I'm sure we'll have a view on this. He's very much attuned to what's happening in the space. But there's news out of the courts as well. The Sammaan Capital case was in the Supreme Court, and it got heard today. And not very good news coming through from there. Ashmit, take us through what happened.
Well, this case was clearly in focus. The stock was clearly in focus on account of the Apex Court hearing, the Supreme Court hearing. The reason for that being that in the last hearing that took place, we had seen the Supreme Court come up with use very sharp language with respect to the investigating agencies, asking why they had a quote-unquote friendly approach, asking why they were reluctant to go ahead and to investigate this matter. In fact, pushing the three agencies, that's SEBI, the ED, as well as the CBI, to go ahead to register an FIR to move forward with their investigation. Now, importantly, the update on that was given in this hearing today was that an FIR, in fact, has been registered. It's been registered by the Delhi Police, by the EOW wing of the Delhi Police. This can now form the basis of an ED investigation. The ED requires an FIR for proceeding with an investigation. As far as CBI is concerned, what is the CBI doing? Well, that's another question that the Supreme Court asked, saying that the CBI is now been given 1 week's time within which they have to collect documents from the MCA, from the Enforcement Directorate, from SEBI, and firm up a position on whether or not they want to move ahead with registration of an FIR. Now, bear in mind that Sammaan Capital, at the last hearing itself, had clarified that, look, we've got nothing to do with this investigation. This investigation is into the conduct of the erstwhile investors, of the earlier promoters who have absolutely no exposure to Sammaan Capital. But nonetheless, this is something that the Apex Court is eager to proceed with, is eager to seek an investigation on, and is nudging the investigating agencies towards moving ahead and registering FIRs and proceeding with their investigation.
Ashmit, FIR against who? I mean, against... so, do we know who all have been named and just the entities here?
Well, the scope of this investigation, and this is something that, in fact, the counsels for Sammaan Capital were also telling us, the scope of this investigation is purely with respect to the conduct of the erstwhile promoters. So that India Bulls Housing Finance, their promoters, the erstwhile promoters, is what the investigation is going to dive into, is going to look at. And that has been the thrust of what Sammaan Capital has been saying inside the court, outside the court as well, to us, their lawyers as well, saying that don't put us under the same umbrella as the companies that are and the promoters who are under investigation. We've got nothing to do with them. That's the clarification that Sammaan Capital is.
No, Ashmit, my question was the Delhi police FIR is against who? Who's been named? Do we know?
Well, the details of the FIR are yet to emerge. They've only been filed recently. In fact, on record, these details were not even available before the Apex Court. We're given to understand that only last night is when all these details were compiled together and put in the form of an application before the Apex Court. So, yes, those details are important. Those details are awaited. We're yet to get more color on those investigation details.
Yeah. No, absolutely. And I think that is a critical point here, right? I mean, because if it is against the erstwhile promoters, then the Sammaan and the issue, of course, with Sammaan is, we got an investor who's committed capital into the company. So in that sense, in some way, as Sammaan itself is saying and his lawyers are saying, they're not involved. So that transaction, and I mean, basically can be like a parallel, almost like a ring fence thing for someone. We'll have to see. The details of the FIR in that sense will be important. Or will Sammaan itself be dragged into this entire quagmire once again? So something to watch out for. Ashwin, thank you very much for that. Gurmeet is with us. Gurmeet, good afternoon. Good to have you with us here. Thanks for joining in. I just want to start with the first thing, which Yash put out as a story. And the mutual fund TER norms, what was suggested and what Yash is essentially saying is most likely they'll push ahead, at least try to push ahead with what was proposed earlier without too much dilution. Just your thoughts.
So, Prashant, I think some tweaking in expense ratio now, I think, is an ongoing process because the size of the industry has grown. If you see the SIP AUM in equity now, as per the last month, is some 16-17 lakh crore. That's almost 35% of the equity AUM. So as corpuses grow, I think some moderation in expense is likely. What I would expect from SEBI is to put one formula in place. So there is certainty, because if we keep revisiting the formula basis slabs, then it creates a bit of uncertainty. So hopefully in this consultation paper, you'll have a final slab. And I think too much micromanagement on expense doesn't really serve the purpose, because if expense keeps reducing, the distribution fee also keeps coming down, and then your overall goal of reaching beyond B30 also gets impacted. So if you see now 40% SIPs are coming beyond B30. So SEBI is trying to balance it by giving more incentives for the B30, which is beyond top 30 cities, and maybe optimize. So the larger funds where the size is more than 25-30,000 crore, the impact is more. And that can dent, likes of larger fund house like HDFC, Kotak, ICICI, SBIs of the world, because some of their funds are more than 50,000 crore assets, whether those are hybrid funds or flexi cap funds. So it's a bit of a negative in the short run, but eventually with the growth industry seeing, it gets reset. And industry would prefer a clarity that, every 2-3 years it should not be really tinkered with. But overall, I don't see much impact coming.
Gurmeet, hi. What does one do with Meesho? If you hold it, great. But for fresh investments, at a market capitalization in 98,000 crore, is there still anything left if someone purchases today?
No, I don't think so. I think it's this is how unfortunately the market is. Remember, Grove was 200 a few weeks back. We were discussing, and if you enter then you are now stranded at 145. I think this market is when it comes to pricing good, it's pricing it very well, and when it comes to negative movement, it's going extreme both ways. I think it's a great business, nothing about it. But till the time the monetization happens and what they promised they achieve over quarter on quarter, I think there's some way to go. So I'm not a entrant at this price. In fact, I'd be happy to look at places where there has been a very healthy correction, like Grow, likes of Eternal, where the model is now stabilizing. We know that they are, for example, quick commerce, they are largely 3 players now, with one of them with 46% share, and you have a little bit of growth runway coming in. So I'll better off looking at them and then going after something which is hitting upper circuit.
Yeah, but, Gurmeet, that's the perfect logical, fundamental, stance that you've taken. I have a different question. What is up with our market? I mean, how does a newly listed stock move from 100 to 200? How does it double in what I think 7 or 8 trading sessions? So is it perfect price discovery, or is it now becoming imperfect price discovery? I mean, we all need to think about this because Zepto is listing next week. And, almost all the experts agree that discussing the business is one part of it. But the way the price is moving is leaving investors absolutely confused. What do you think is going on here?
I think 200% with you, and I think, there is movement sometimes which is defying logic, both on the downside and upside. Just look at some of the defense names, for example. I know about 3 names which have got huge orders in last 30-40 days, and the stock is actually down 10-15%. Similarly, let's say, for example, I'm taking a name, not comparing it. Let's say, for example, there was the news of today, Apple looking at CG Power for the chip supply. The stock hasn't reacted. Right, and you have something. So I think it is excess liquidity chasing very few pockets, and I think that is driving up prices. Look at ICICI Pru IPO.
Yeah,
3-4 lakh crore bid for a 10,000 crore IPO. Yeah. So I think the market has become like that, where people are looking at more trading opportunities, if I can put it that way. More also from an investor point of view, people probably are saying that the market has not done anything. let me see where there are a few pockets, but it backfires. When you chase momentum like this, it backfires very quickly.
Absolutely. I mean, best of luck to whoever is investing with this sort of a momentum, because it works both ways, on the way up and the way down. We know that. Okay, hang on, Gurmeet. We'll have more questions for you in just a bit. But the financial sector continues to be in the spotlight. And a big investment could be on the cards for Shriram Finance. Now, the board is looking at a meeting. They will be considering a fundraise on the 19th of December. And this comes in as reports are suggesting that Japan's MUFJ, Mitsubishi UFJ Group, is set to pick up a significant stake in the company. Some of these reports are saying the stake could be as much as 20%. Gaurav is joining in with more details. Gaurav, this has been on for a while. Where are we now?
Well, as you said, the most speculative deal of this year, at least in terms of financials, this could happen and this could come live on Friday. And the reason being that now Shriram Finance is going to have a meeting on Friday where they will consider fundraising, which also includes QIP. Now, why this is important is that we have already seen series of reports who suggested that MUFG is interested in buying around 20% stake in Shriram Finance. In fact, the latest report suggests that the valuation could be anywhere between $3.2 to $4 billion. Now, if we consider $4 billion valuation for 20% stake, it leaves roughly around 10% upside even from this level. Now, why this is important is that this is not actually the capital which is required by Shriram Finance. They already have 20% capital adequacy ratio. Now, this is important because with this new and fresh capital, the cost of fund is likely to come down. And at the same time, given that MUFG will be seen as a strategic buyer, there is some room for re-rating in terms of the credit rating, and that is the reason why cost of fund could come down even further. Now, if you look at Shriram Finance and the performance, we have already seen the stock rallying more than 25% in the last 6 months itself. And even after this rally, if you look at valuation, it currently trades at around 2.2 times price to book if we compare it with FY27 earnings. Now, if you compare it with its closest peer, which is Cholamandalam, it is still trading at 4.1 times. So there is another further headroom for growth, even if you look at valuation and even if we consider the 25% plus rally that we have seen in the last 6 months. If you look at the management commentary, earlier they had denied, but at the same time, during our last conversation with the management, they said that there will be many discussions going on and there will be some interested party always in the company. So they did not deny that the deal is happening, but at the same time, they did not admit. So definitely all eyes on Shriram Finance and what happens on this Friday in the stock.
No, got that. Gaurav, thank you very much. Very helpful. Gurmeet, the Japanese are coming in full force.
Across, Prashant, just see the number of deals which is happening. And I think that's where probably the sunshine news is, considering amid all gloom we are seeing on FPI selling. Shriram Finance also, Prashant, if you see, the operational performance has been very resilient. I think their margins actually grew 8-9 basis points last quarter as they utilize the surplus liquidity. The construction finance equipment portfolio is not doing that great, but should pick up now with monsoons, erratic monsoons behind us. The gold loan and the vehicle portfolio, which is their strong points, doing very well. They're doing some very good job on wealth management also. They're stitching together a nice team, a lot of good people joining, a lot of RSUs being given as ESOPs. So I'm pretty hopeful. It's just that the price right now, because the news is so much, you may see a one-day reaction when the deal actually materializes, but it trades at a fairly good multiple. Balance sheet is 2.9 lakh crores. So you can't grow like 20% here. You will probably grow at 15-16%. So I think it's a steady NBFC to have in the portfolio. But just from a news-based figure, I think some of it may have already been the price.
Thank you, Gurmeet, for joining in. Prashant, I recently met a very large VC investor in India, and he visited Tokyo. And again, I asked him, I said, looks like there is a lot of Japanese interest.
You met him in Tokyo?
On the flight. All right. So I asked him, I said, looks like there's a lot of money, right? I mean, are you looking to raise money to invest? And he said, there is Japanese interest in India, but only when they can control the investment. They are not willing to part their money to an Indian fund manager to make the investment. So when they come to India and commit their money, it will be by setting up an office here, getting their key people in, and then having the Indian operation. So they need to control it. For Japanese people, trust is very important. So, there is interest in India, but the way they're going to direct it is not hand it over to some Indian guy to run it, but actually control the processes, control the operations, and control, when they're putting the capital in. But we'll get into a break on that note. On the other side, we'll continue to talk markets. Tushar Pradhan of Hexagon Partner joins us next. Welcome back. Still sluggish, 25,800 though on the tape, down about 50 odd points. But let's brighten it up by talking about individual stocks where you are seeing large price and volume action. Harmis is now joining in. Harmis.
There are certain stocks that are still brighter, even as the broader markets are dull and the benchmark indices likewise. But Vedanta, Water and Infra, it's a recent listing among the first of the year this time around, is up 15% today. It's the biggest single day gain. On an intraday basis, the stock was up around 17-18%. That was the biggest single day gain since its listing. Volumes are the highest in 3 months. We have had close to 1 crore shares that have already been traded on the stock. The 20-day average is just 1 lakh. So it's gaining on very strong volumes today. It had retested its IPO price of 294 and it's rebounding from those levels. And it has also ended up crossing an important level, a 200-day moving average of 344 on the upside. Roto Pumps is another name that is seeing double-digit gains today. The stock is up 12.5%, the biggest single-day gain since July last year. Today's volumes are the highest on record for the stock. And take a look at the volumes today. 5.7 crore shares have been traded today. The 20-day average is just under 3 lakh shares. Now, that's the kind of volumes with which the stock has moved today. The stock has moved above its 50-day moving average of around 65 or 66. And today's turnover, which is around 400 crores as we speak, is almost the same as its free float market cap, which is close to 430-440 crore. But the stock has been an underperformer this year and down around 27% so far. Apex Frozen, the stock continues to move higher, has gained in 4 out of the last 5 sessions, extending its gains now 17% higher on the stock. There was a block deal as well that took place during the course of the session. It snapped an 11-day losing streak last week and it has built on to the to gains from those levels. More than 1.5 crore shares already traded, the 20-day average of around 15 lakh shares. It's taken a support at 260, continues to do so over a period of time and it rebounds. And courtesy of today's gain, the stock has turned positive for the year. And lastly, on the downside, Gallant Ispat is the top loser on the broader market indices today, down 13%. The biggest single day fall since May of 23, down in 4 out of the last 5 sessions. Among the top losers in the broader markets, the stock 12.5 lakh shares traded, 20-day average of 2.5 lakh shares, broken below its 200-day moving average as well today. Why is that important? Because it has not traded below the 200-day moving average since March of this year, but it's decisively broken below that in today's session. And despite that, the stock is up around 50% so far this year, turning out to be the 3rd straight year of positive returns.
Okay, all right. Harmis, thanks very much for that. Interesting list as always. 45 points lower, 25,811 is where the index is now trading at. I just want to make a quick reference to, not sure if this is, okay, it's not new, but PB Fintech, maybe we can pull this stock up. It's not as if it's sold off hard now, but it's sold off hard nevertheless. Look at that, 3% cut on top of yesterday's near 6% sell-off. So that is coming in for some serious amount of selling. Once again. So 1765. Some of the other insurance stocks like SBI Life, etc., also given back gains. But of course, this one, nothing like this one, in the entire pack. Tushar Pradhan is with us, Director, Hexacon. Tushar, good to have you with us here. Thanks very much for joining us. Any thoughts on a name like PB Fintech, Policy Bazaar? If you've looked at details, it's a story we carried all day yesterday. I'm sure you're familiar with what's happened here. I mean, the basic idea is to bring down commissions and powers being given to IRDAI, if they so choose to exercise those powers, that they can cap commissions now. Your thoughts?
No, so without talking about the company specifically, I think the direction where the regulation is going is to kind of give the market a sense that it's not going to be blue sky from here. Even if you are disrupting the market by providing, a portal where a lot of customers can access it easily and having established such a model, I think the fear that the market currently has is that is the model as sound as it was initially thought of. And I think that's really what is causing the jitters. But I think, as we all know, over time, all of the participants in the market find their own level. So whether you are face-to-face seller, whether you have a sales force, whether you are a portal, whether you're a broker, I think each of them will figure out their way of a business model. And I think that is what the market, the instant, is unwilling to give you at the moment. So I think they are just probably reacting. The market is reacting to the fact that their model would probably now need to be revisited. Of course, the fine print in the regulation has to be seen, etc. So it's probably a reaction. But as I said, markets is a great leveler. We just wait for, the winners to come over time.
It's just one thing. It's not as if anything has happened yet, right? The powers have been given. Now, the question many are asking is, well, all of this is in the bill because maybe the IRDA asked for the powers, and that's why it's in the bill. So maybe at some point they'll exercise it. But as of now, it's just there in the, it enables the regulator to act, but nothing has been done. This is, of course, the market, of course, trying to make sense of it and saying, well, perhaps something will happen and the IRDA will do something about commissions, which has been publicly sort of concerned about, not just overall, EOM, which is expenses of management, which is commissions and operating expenses, but, specifically commissions as well. Rima.
Tushar, hi. Just big picture question to begin the conversation. What would be your top 3 portfolio bets for 2026?
Well, as I said, again, it's very fraught with danger to predict anything. But I think it is turning pretty significantly positive from the way I look at it. Because if you look at the start of 2025, it was a much more difficult market to predict than it's now in 2026 for 2 reasons. One is that the market hasn't really gone anywhere, which means that your top line remains the same and your earnings have grown at a single-digit rate over this last 4 quarters. But going forward, I think the situation is likely changed because your confidence in the earnings growth coming through not only in the next 2 quarters, which is finishing your financial year, but going into the next year, which is FY27, I think there is a lot of confidence in the forecasts for most earnings to kind of jump back. So at best, you are going to get some increased volume in earnings coming through, which will either normalize your inflated PE, which was carried over for the last 2 years, or you will actually now make a base case PE multiple and then go forward from here, which means that the potential for making money is actually in your favor going forward. Of course, the market has to believe that. Market does move on sentiment, etc. But I think I would still put, financials, capital goods, manufacturing, I think right up there in terms of, each of the sectors which are likely to do well from here because they are the beneficiaries of this increased volume in earnings.
Look at what's happening with Samman Capital. I'm not sure if there is any details which has come through, but the stock actually is recovered. Yeah, it's come up quite a bit from the lows. Low was about 142 and stock's at about 146 right now. As I was talking, I was sort of chatting with Ashmit earlier on the air. We don't know exactly what the FIR is about and who is it against, who's been named. If it is erstwhile promoters who are already out and have got nothing to do with Samman Capital, so then this becomes simpler in that sense and is positive. So I'm not sure if that is, somebody got a copy of the FIR or whatever, but I mean, stocks are recovering as we speak at this point in time. This, Indigo was down 10% last week off the low. It's come up a little bit off the lows. Again, when a big market sort of almost a monopoly, right? I think in about 70% of the sectors Indigo operates in, it's pretty much a monopoly. You think, and it's of course undergoing a bit of a rough patch. How would you look at something like this?
Yeah, I think I'd like to bring in a classic, the word itself. When Warren Buffett actually doubled down his bet on Coca-Cola when they launched, a new version of their drink, and all seems to be lost at that time because there were protests. People were really unhappy with the new thing, and they wanted to bring the old flavor back, and they brought it back in the name of classic. Now, that is a very, very pivotal moment in terms of one's conviction. So it is not about market, adjusting to the reality. So we cannot push the market to do what we believe is right. But I think individual conviction in terms of whether you think this is a near monopoly. India is a great growing market for aviation. There are going to be significantly more airports. There are going to be significantly more aircraft. Significantly more passengers through in the next coming few years or so. So I think it's a math that everybody has to just figure out for themselves. The current situation, of course, being driven by market sentiment, etc., can be a great opportunity. But as again I said, it's a very evolving market. Whether we know of any new entrants coming into the market, whether the markets open up to allow for more licenses to be carried forward, who knows? I think given the situation, clearly there is overreaction in the markets. But I would again think twice before jumping in, because this has just fallen off a cliff. Because there might be some follow-up in terms of the penalties which haven't really been open yet. So we still have an evolving story here. I would wait and watch. Would try to price it at a reasonable value metric. Knowing what the background is, I think every investor needs to take his own call.
Got that. That Coke example is interesting. Is an interesting one. Thank you very much, Tushar, for joining us. Good speaking with you. Have a good one. Good getting that perspective, and we'll speak again. We take a quick commercial break here. We'll get you some trading ideas on the other side, so that's coming up in just a bit. But lots of individual other stories as well. We'll try the spotlight once again on Vedanta, and there is a exclusive coming up, I believe, on Vedanta as well. Stay tuned.
Welcome back. Well, it's that time where we get you some final trades for the afternoon. Rahul Sharma is back with us. Rahul, so how's it looking now? Indices, any fresh calls? And otherwise, final stocks, what will you go with?
Yeah, so indices are pretty much flat with no real breakdowns seen on either of the indices. However, PSU banks have seen good amount of buying in today's session. And our top pick is Canara Bank at these levels. The stock has seen an expansion in volumes. For a BTST trade, one can look to buy for a target of 153, 154. Stop loss placed at 148 on the downside. Apart from that, it's Titan that is also looking good. Yesterday, the stock saw good volumes, big price candle. And today, I've seen quite a quiet day, but the structure of the stock is still very positive, and one can look to buy Titan for a target of 4,000 rupees as an immediate one on the upside. Stop loss placed at 3870.
Thank you very much for that. Let's get to Meesho. Issue price was 111. It had a blockbuster listing, and after that, stock continues to trade higher and higher, and today up 20%. Manglam is now joining in. Manglam, tell us about this UBS note.
Well, it's doubled from the day of its listing, and it's just 5 sessions, right, in which the stock has doubled from its issue price of 111. And today's up move is attributed to, the note that has come in from UBS. The important part out here is not very different from what the management had said to us, during the IPO as well. The first part is that their asset-light, negative working capital sort of business model lends itself to good free cash flows accumulating for the company as against other new age players, and that's something that the management had said as well. Despite the reported EBITDA loss and net loss, the company did say that they have free cash flow to the tune of 1,000 crores, and that's something that they believe will grow going forward. Add to that, they also believe that the net merchandise value of the company can grow upwards of 30% CAGR, and that's something that the company has been showcasing over the last 2 to 3 years, a CAGR of between 28 to 30% as well. Importantly, we're looking at contribution margins improving as well. This as the company passes on efficiencies to consumers, which we can see in lower average order value and increased trade frequency. But more importantly, the transacting users, which currently stand at around 20 crore, have a headroom all the way up to 51 crore in terms of numbers being added to annual transaction annually transacting users. So all these factors working in Meesho's favor, the long runway of growth. But importantly, one must make sure that in the next few days as well, we would see these kind of moves on the stock, largely because in the early days of an issue, only 6% of the equity is available for trade. So this creates a large impact cost on either side, up or down. 6th Jan will be an important day for Meesho because that is when the first of its lock-in ends, and there would be a large chunk of trade stock which would be available for trade. So lack of liquidity along with positive business news is also causing an exaggerated move in the stock. So just watch out for that one.
Okay, all right, Mangalam, thanks very much for that. That's Meesho in focus there. Well, around same time, yesterday we were talking about how NCLT is essentially given the approval for the Vedanta demerger. It's a big boost for the mining giant. to understand more about the latest developments and how it will impact the future business of the company, Nigel caught up with Anil Agarwal, the chairman of Vedanta. Listen in to a slice of that conversation.
Well, over the past few years, I've had the privilege of interviewing Mr. Anil Agarwal annually. In 2025, we had almost missed out until NCLT's approval of Vedanta's demerger proposal became a defining moment. So rather than wait till 2026, this milestone calls for an immediate discussion. We're therefore pleased to have Mr. Anil Agarwal, who joins us on the show. Well, Mr. Agarwal, first, congratulations, sir, on the NCLT approval after a brief delay. You know, the street was waiting by, and the NCLT has given the green signal. So congrats to you as well as the team.
Look, thank you very much. I'm grateful and thankful to the NCLT and the judiciary and the entire government, and everybody was together, and we are here today.
All right.
I'm very thankful to each of them to help us to be here.
All right, Mr. Agarwal, NCLT approval has come through, but there are a few unanswered questions. So let's get straight to that. What's the expected timeline for completion of this demerger? And by when can investors have, the new entities to be listed by your expectations?
It should take normally 3 to 4 months. And we believe by March, this should be done.
Got that.
We will not do anything unturned to make sure this happens.
March 2026 to April 2026, 3 to 4 months from now on should be around then. We got that, sir.
Yes.
But with the demerger underway, does Vedanta now, you have the option of divesting or monetizing an individual asset? Could steel be one such candidate that you could look to divest?
It's too small to talk. We are in big picture. Let's talk about big thing. I know this is a process. If demerge identity and CEO, they say what need to be done, they have to restructure it. But let's look at, I want to remain on the top level.
Okay. And at the top, sir, you have done a good job actually in the big debt reduction at Vedanta Resources. I think that's nearly halved in the last few years. What are the debt reduction targets from here on Vedanta Resources? That's already down by half.
Yeah, we have very structured program. Whatever this is happened to all the multinational company in the world. So this is a structured program, and in 3 to 4 years' time, we'll be completely paid off all the debt on VRL.
Got that? All right. So in 3 to 4 years, we could have, Vedanta Resources that will be debt-free. Got that? Now, if you could tell us, sir, how big is this entire value unlocking exercise for Vedanta Limited? If I look at it, the current market capitalization is ballpark around 2.2 lakh crore odd. In your view, what should be the group's sum of all parts valuation once this demerger is completed?
See, this is the need of our India is growing 1.4 billion people. There is no other place like this. And we are in a sector which is growing almost double digit. This is a win-win for everybody. This is a win-win for everybody. I'm looking for thousands of industry comes because we produce raw material. Whether it's the aluminum, copper, oil and gas, zinc, anything you talk about, we produce. And these are growing tremendously to be processed. So each of this identity can double the production comfortably because demand supply gap is there. And we can do brownfield expansion, which is going on each of this sector. And we are going to produce most of our production now through the renewable power, which will be the green metal. We will produce green metal, very, very keen. So looking at that, we are going to produce oxygen-free copper, we are going to produce aluminum, alloy, which will be used for every sector. So each sector has a tremendous scope. and it's end-to-end. Whether it's a mining, 3-4 processes, then smelting, and then value addition.
Right.
So this is the I feel that the all of us, again when I'm using the word, is going to be 100% double capacity of each of our business.
Okay, you can catch that entire conversation later this evening. It comes up at 5 p.m. only on CNBC-TV18. Right, let's move on and welcome in Siddharth Khemka into the conversation, Head of Research Wealth Management at Motilal Oswal Financial Services. Sid, good to have you in. Let's start right there. Vedanta, you just heard Mr. Anil Agarwal saying that it'll all be probably complete over the next 2-3 months. He says that there is a very clearly planned and well-defined debt reduction plan as well. What do you think of this 5-way demerger and what's the advice to investors?
Yeah, hi, good afternoon. I think it's a step in the right direction with the multiple commodities business. Each commodity has a different life cycle and economic cycle, and that creates a lot of confusion, especially for some of the large investors, institutional investors, which look to play certain economic cycles. I think the demerger will create those synergistic business and will lead to attracting the right kind of investors for the separate businesses. Also, it could lead to unlocking of value for a retail investor as well, because a lot of holding company discount that will go away for some of these separate businesses. Overall, I think it again will help the company to deleverage, which has been a major concern that despite some of these commodities doing in an upcycle, debt levels has been pretty on the higher side, which over the last few years the company has brought down under control, but still needs a further reduction, which this would also help them. Finally, we believe that with all these things, there is a probability of some of the individual companies getting a credit rating upgrade, hence lowering the cost of debt as well. So overall, we like the businesses separately as well, and the demerger will only unlock value going forward.
Okay, all right. Siddharth, stay with us. There's about 9 minutes to go for market closing. We'll take a quick commercial break here, come back and continue this conversation with Sid Khemka on the other side. Stay tuned.
Welcome back. Less than 5 minutes to go before we wrap up trade. Siddharth Khemka is still with us. Siddharth, Shriram Finance, all eyes on the, if a deal is announced with MUFG, board meeting on 19th. But after, 45% rally, 50% actually since the start of the year, is all the good news in the price?
So yeah, I think if you look at not only they have benefited from the upcycle in the auto sector, they have also benefited from the cut in the repo rates, as well as the enough liquidity provided by RBI throughout of 2025, which most of the NBFCs I think benefited out of that in NIM's improvement. And on back of that, we saw a sharp jump in the share price. So currently, our target price is about 860, which is closer to the CMP. I think the new deal that the fund raise that can raise the book value as well as the return expectation and the growth expectation going forward. And hence, we remain positive. However, I would not suggest fresh entry until we get the final prints of the fundraise, which could lead to further upgrades in this in both the growth estimates as well as in the target price. But nonetheless, very strong business model, market leader in its space, strong financials, and should continue to do well.
Okay. By the way, today a couple of these infra names have done well. Dilip Bilkon, for instance, is ending with a gain of around 6%. The other recent listing, Acus is up about 13%. And then, of course, Misho tops the charts with its 20% gain. Some interesting movers on the green side. Otherwise, the mid-cap market is negative. Siddharth, recent listings. I think our colleague Hormas was pointing out even Urban Company. Originally, I think the day started well. Let's pull up the Urban Company stock as well. So they're all gravity-defying, many of them at least. Would you buy anything or would you keep anything in the portfolio? There you see a lot of volatility on UC today as well. Siddharth?
So I think some of these new age businesses, there has been hype on either way. So while some of them where the profitability, path to profitability is very clear, market has liked those kind of stories, and where there is a much more of hype built into the numbers, plus the path to profitability is not that clear. I think that is where the street is keeping their hands off. So a mix of a lot of these new age businesses, we would not have a direct coverage on them per se. What we can say is that among the quick commerce, e-commerce space, we continue to like some of the legacy businesses like, for example, Eternal and Swiggy. There has been a lot of chatter in the market about the fundraise and the probability of increasing discounting and all those things. But we believe that the competition has matured a lot. Even Zepto, which is the latest entrant, is looking to come with an IPO, and hence there will be a sharper focus on profitability going forward. So I think the fundraise by Swiggy is a positive step in the right direction, building a strong balance sheet for the competition going ahead. So both Zomato, which is Eternal, and Swiggy is something that we like from this quick commerce, e-commerce space.
Okay, Sid, stay with us. We're going to just wrap up things and then come back to you for markets forward. Finally the close was about 30 points lower. So this is a very, very flat day, but, Nifty Bank, something similar, right? I mean, 60, 65 points lower, which is, again, absolutely flat. The mid-cap index ends about 0.6% lower, so a little more meaningful here on the downside. Small caps even worse off, about 0.8, 0.85% down. And as I said, market breadth is negative. It's basically a clean 2:1 declines to advances ratio. That is the overall picture. I mean, PSU banks, perhaps one area where there was it kind of stood out in a falling and drifting market. IT stood out, and of course, metals as a pack also did well. On the downside, defense and real estate are two areas where there was pressure as a pocket. That's the overall sense today. Rima.
Well, a couple of big stories. One is Meesho locked in an upper circuit of 20%. UBS initiates coverage, target price 220, and stock surges towards a 1 lakh crore market capitalization. Shriram Finance also ending with a 2% plus rally ahead of the board meeting on 19th, where they will consider a fundraise. Other gainers include SBI leading the PSU banking pack, Hindalco, Eicher Motors, Wipro, Coal India, also topping the charts. On the way down, a couple of these insurance companies were weak in trade. So Max Healthcare, HDFC Life, SBI Life, private sector banks, HDFC Bank, ICICI Bank also put pressure on the overall banking space. So the Nifty Bank ended flattish, down 85 points. Private sector banks were weak, but on the flip side, PSU banks did well. Trent, Bajaj Auto also in focus, and keep your eye on TCS. Investor Day starts at 4 p.m. Let's see whether they have any headline-grabbing announcements to make.
Absolutely, we'll do that. On the downside today, mid-cap markets have been weak. Ola Electric is ending 5% lower, with Bhavesh Agarwal selling some stake. There's also IOB down 6.5%, with the government OFS. Shakti Pumps 11% lower. So quite a bit of weakness. Data Patterns 4.5% lower. Nazara is down 3.5%. So quite a bit of weakness in some of these mid-cap names. Well, with that, we're out of time on this edition of Closing Bell. Many thanks for watching. Stay tuned. Markets Forward coming up next.